Good morning, everybody. Happy Wednesday. Yeah, it's Wednesday. It's the high point of the week. Welcome to Pre-Market Prep. Spencer Israel. I got Joel here. I got Dennis here. Man, do we have a busy show today. I mean, every show is busy, but today's show is busier than normal. Not only do we have 15, 20 earnings reports we want to get through. We have two guests on the docket today. We'll have Michelle Krebs from Autotrader and Cox Automotive at 8:35. And then at 9 o'clock, we're going to have a new guest, Dan Ives, Managing Director at Wedbush Securities, will join the show. Dan has never been on our show before. So I'm very excited to have him on because it's been a long time coming. He's their one of their tech analysts, and the guy knows a lot about a lot. So we're going to talk to Dana Ives from Wedbush at 9. In the meantime, as I said, we got earnings, we got news, and I did budget time today for Dennis to tell his legendary lazy boy story. So I hope we can get to it. Let's go, run that intro, hit that like button, and let's get the show on the road.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Yo, what's up, boys? How we doing this morning?
Wow, Spencer, chipper Israel. Man, I like it. I like the enthusiasm. We're down 8 and 9 handles at 55.50. We had a ridiculous move to 44.83, and that's like 4.48 on the spiders at 4.15. I don't know who was buying what and why, but we're about 30 handles off that high, just hovering above the pre-market low. Crude bouncing back from yesterday's $4 beatdown, up $1.10 at 93.18. Gold's down $1.1855. Silver going the opposite way. Silver is up 7 cents at 23.42. Bitcoin stuck in the water at 44.105, down 110, and Ethereum that's down $3 at 31.20. A big earnings reports, big economic day. Triple D, you're going to have your head on a swivel here until 10 o'clock.
It's going to be one of those days, I can just tell right now, because I left for 2 minutes and I just came up and I just noticed SPY flat. I'm like, oh. And I got screwed by the 8 o'clock print because I was just looking at the last. I didn't look at the bid and the offer. I hate that. At 8 o'clock, it always seems to go back flat, flashes back flat because, I don't know, there's like a bunch of off-exchange trades that hit the tape right then. So it changes your last in your system and it screws you up. So anyways, I was in a good mood all morning until I just did that, and I just made a trade based on that we were flat S&P, and I was like, oh my gosh, we're not flat. We're the same place we just were.
Yeah, why'd you
I left
think
my desk
that?
for 5 minutes. What's that?
Was it just when did this
At
happen?
8 o'clock, they does that.
Oh, when they
the
turn
8
on
o'clock prints. I sat down right there at 8
and
o'clock,
everything
and you're
goes
looking at
lit at 8 o'clock. A lot of exchanges go live.
Yeah, they hit the old trades, hit the tape. It screws up your last. And at 46.10, we're showing like we're flat. So I was like, oh my gosh, we just ride the whole thing back again. And then I just made a trade, and I was like, pound my head, sleepy Dennis. Obviously, it's 8 o'clock trades. We didn't just rally 10 handles. So It is what it is. I just made a bad trade off of that. So anyways, now I was in a bad mood. Good mood to bad mood instantly. That's how it works, eh? As you're a trader, you make a good trade, you're in a good mood. Bad trade, bad mood.
Spencer's
life of a trader. The life of a trader.
All right, so we have a lot to get to, and I want to go to some earnings reports, but we were talking about this before we hopped on here, and within the broader context of these earnings reports, because there is a trend playing out. Because I want to talk about Shopify and I want to talk about Airbnb, but I want to do them together, right? Because the Shopify report came out this morning, and it was not great, and the stock is down. I'll give you the numbers on Shopify right now. Their EPS came in below estimates at $1.36 compared to $1.58. Their sales came in below estimates as well, 1.38 versus $1.69 billion. So that stock is down.
The guidance wasn't great here either. And on an adjusted basis, they actually did beat, but it was just a small beat. And I'm looking here at the stock down almost $50.
Yeah.
Here's the problem. Is like it's all about, what have you done for me lately? And obviously we know that, there's been a lot of stocks that have disappointed the street and then just continued to go down. And we've saw it with Facebook where it disappointed. Everybody's buying the dip on the initial day. That was absolutely
No
wrong
way.
thing to do.
Yep.
Stock has went from $248 that day down to 217. So you've lost 30 points on. You've lost roughly 12 more percent since the actual disappointment. PayPal, same thing. Even with the rally yesterday, we had a wicked rally and everything that's beat up. PayPal didn't really get a sniff. It was up like 50 cents on the day. So, I mean, same story. Stock reports, disappointing numbers, catching a lot of people and obviously making new 52-week lows. So bag holders all over the place. Opens that day right on the high tick at 139.89 and has been straight down ever since. So it's like if you disappoint but you snap back quick,
The first day.
they find the
first or
lining.
second day.
You got to snap back that first day. And if you don't get above like the open from that first day, or at least the high of that day, then you're in trouble. And then the death by 1,000 cuts continues to come. So we don't know. Maybe Shopify is going to snap back. Maybe they'll find a silver lining. Maybe they'll say something on the conference call. But if they don't, this could again be the same thing, like slow bleed out. So it's been a mistake to buy. It seems like it's been a mistake to buy the dip on the earnings disappointments. And that's contrary to what we have seen over the past couple of years, where when you get a good name, a wide name in social media disappoints, that they snap back eventually. And in this case, it's just not happening. So I think it's very important for Shopify to stabilize and start to get some of this back, because if it doesn't, it could get PayPal'd, it could get Facebooked. There's a lot of metaphors, there's a lot of different names you could use.
Stay-at-home stock too. I mean, in a lot of ways,
That's
right?
a problem too.
Yeah.
So reopening, and Spencer Israel, to your point, which was a great point you just made on the pre-market show, is the stay-at-home stocks, and we've been talking about the reopening trade. Let's just go to there. The reopening trade has been actually very sneakily hot. And you have seen a lot of reopening stocks rally substantially. I mean, Royal Caribbean, the cruise lines are up 10, 12% in the last week. American Airlines, airline, $15 2 weeks ago. It's almost $19 here now. That's a big 20% move. The reopening trade is kind of on. And that means the technology trade is taking a little bit of a backseat right now.
So I have a few things to point out here. First off, Airbnb, this is, I guess, simultaneously a stay-at-home and a reopening trade, but I guess mostly a reopening trade. Reported last night, profitable for the second quarter in a row. Sales came in above estimates. They gave strong sales guidance above estimates. Their EBITDA was a massive year-over-year increase in the adjusted EBITDA. And we were streaming the conference call. I was listening to it, and the CEO made a great point. Airbnb as a company was founded during the Great Recession, and it was born out of that. And that was a massive catalyst for the company's growth. And he said this on the call yesterday. You could just see a ton more demand in terms of, or supply, I guess, in terms of number of rentals on Airbnb. People looking to get some more income in an inflationary environment. People looking to generate rental income. So Airbnb had a very good quarter. So I would point you to that. I'd also point you to Expedia, who reported, I think, on Thursday, traded down all day Friday, and has come all the way back in the last couple of days. So the reopening trade is just echoing what you said, is very strong here.
Yeah, so they're buying the reopening stock. So what we try to do, and what I try to do as an avid trader and an active trader, is try to identify those patterns. And once you can identify a new pattern, that's what's working. The pattern in this earnings season is exactly right. They've been buying the reopening stocks on the dips, and they haven't been so much buying a lot of the other technology companies on the dips, like when you've gotten the earnings dips. Again, it's trend too, right? So Expedia wasn't breaking down to a new 52-week low. It was a dip and an uptrend. So that still holds. Stocks that are in overall uptrends, they're still buying the dips on those. The stocks that are in downtrends, they're not buying the dip on those. And it makes sense because you have so many bag holders. Not a lot of bag holders in a stock like Expedia, at least not in the last couple of, Not well, if you go to Expedia, I mean, not at all. I mean, the stock's at an
No
all-time
bag
high.
orders. Yeah.
That's incredible. When you think about where we are, and you've got Booking, which is right up there too, near all-time highs. I mean, we're going to hear from Trip, I believe, tonight. Yeah, we're going to hear from TripAdvisor tonight, which has definitely not been the best of breed. It's been a laggard in the group. But, I mean, there's a clear path of what you're seeing. And if we start looking past COVID, I mean, and you see the media attention in Canada, and, they're saying, you think you've got a different picture here. Ontario's open. We're open for business. I mean, it's not like we're locked down and it's a communist country and the government's controlling everything. That's a media narrative that's, basically fake news. It's, not anything the case. Movie theaters are open, restaurants are open, people are going about their business, schools are open, everything is reopened here. So for the most part. And, and they're talking about getting rid of the vaccine passports, which I agree with. I don't think the vaccine passports are necessary because I think the data is showing that a person that's vaccinated and a person that's not vaccinated carry it the same way. So meaning that if you're not vaccinated, you're not any more risk to the other people. You're only at risk potentially to yourself. So I don't see why we even have these vaccine passports. I know other countries have gotten rid of it. I know that's what the truckers are protesting. I'm not saying I'm with the truckers. We don't need these vaccine passports anymore. So, but they're off the Ambassador Bridge now. I mean, but I've taken it to that conversation. But I'm just saying we're trying to look past COVID here now. We are reopening, and a lot of those stocks are the ones that are really moving higher. So the reopening trade is on.
Oh, yeah. Marriott, Hilton.
In an environment where stocks have been relatively weak overall, the Hilton's at an all-time high there too. I mean, you have stock. Marriott, you're right too, Joel. Marriott, I mean, the reopening trade is on. Even Disney, it rallied on its earnings. It dipped a little bit after, but they've bought it back up there again. So you can see clear separation here that the reopening trade is on. I don't know how long that lasts. Maybe there's going to be another wave. Maybe there's going to be another scare. But I think you're buying reopening stocks on dips. And Shopify, unfortunately, is not a reopening stock.
I don't know what to say about this stock technically here. You got a pretty much a step-down seller. I don't know what that last print was, but they're pressing this thing. The good news for us Shopify shareholders is that there is support in here. And I'll split the last 2 months lows. We got down to 780 in January, 806 this month. I mean, it's a wild stock. I mean, yeah, maybe you can hold. I don't know if you get down to that 780 today. Maybe a little whoosh under 800 and then come back up. But right now, no one wants to own this thing. And if you really want to take a bearish stance on this thing, you got 702 is your June low of 2020, and then you got 595. 595.03. I mean, and we've seen what a lot of these other stocks have done to their monthly charts. Like you're thinking, oh, it's not going to go through that area, and it cuts through it like a hot knife, like through butter. So 800 is my level today on the upside on a pop. If you're trying to play this from the long side, I think you have to drill down on your shorter term charts, your 15 minutes or your 30s, if you're trying to buy the dip in this.
And you know what's not a reopening stock? And we were warned about this on yesterday's show, is Roblox, RBLX.
Definitely not a reopening stock.
Michael Pachter on our show yesterday said, yeah, I mean, you had a lot of people playing Roblox, a lot of kids on Roblox when they were doing school from home, but they're not doing school from home anymore. And their earnings report out yesterday, and they came in below estimates on the top line revenue, on the bottom line earnings per share. And yeah, I mean, the stock has getting killed here this morning.
You know why Pachter just makes good calls? He just stops and thinks. Like what's been happening here? And you're right. It's just a natural. This was a stay-at-home play. This is not a stay-at-home environment. Obviously you've got great support down here. You got the old low $53, so it's $7 lower. You have a little bit at 60 as well. Is it going to bounce off there? It's still a loved name. It could. But again, this doesn't fit the script that, we're jumping into lower PE, value-oriented reopening stocks. It's not what the market kind of wants right now. So it has not had a sniff of a bounce here. since the report. It bounced a little bit in the initial candle, but then we just had a slow bleed out. So you're down here near the lows of the after-hours session. 60 is huge. Like there's the double. Joel, you can see that level. I mean, it just jumps out like a sore thumb. 60 is very important here.
But it's just sitting here right now. It's just sitting
not getting away from it. Not getting away from it. So it's not the kind of stock that I'm so inclined to come in and buy the dip. And obviously, we're talking about a company. I'm assuming they don't make money. Or do they make money? I'm assuming not.
Roblox, they're not profitable last quarter. Let's go back.
I don't know if they've ever been profitable.
No, they have not.
I mean, Pachter comes on the show, on a stock like Unity, gives us, a path to profitability. Like he's got numbers to get there. I don't know if Roblox has that same path right now. I'm not sure. I don't follow it closely enough. I'll just say from an in favor, not in favor, these stocks aren't in favor right now. So the metaverse, it's not about the metaverse right now. It's about the reopening. The metaverse is the opposite of reopening. The metaverse would do very well in a stay-at-home lockdown environment because, we can go socialize through the metaverse. People have been locked down in some countries. I know it's in a lot of places in the U.S. have been open for a while now. But Ontario, Canada, just coming out of it. So, and other countries are just coming out of it. So, and maybe China's going into it. I don't know. But I mean, we're excited to get out there and do stuff. So there's a lot of the world that is just coming out of this and excited to get out there and start doing things again. So staying at home and putting on my Oculus glasses and pretending to, be somebody that I'm not, and going over there and socializing at, some virtual club, drinking a virtual beer, having a virtual appetizer.
Dennis.
Knock it till you try it, Dennis. Knock it till you try it.
Don't knock it till you try it. I agree with Spencer.
Did you try it? Have you guys tried it?
I've been live with it. People love this stuff, man. Gotta get with the times, man.
It's good.
The times are telling me that the market is not into it as much. The market is telling me that, at least from the short-term perspective, that I'm right with my viewpoint because I've not been a fan of the metaverse here for a long time. I've publicly tweeted that out multiple times. I'd love to be short the metaverse. Shorting stocks like Roblox, Facebook, that's probably been the play. But, I mean, now is it getting overdone the other way? Is there an opportunity here in the long run? There might be. I don't know who the winners are going to be, though. It's so new. Like, how do you know if Facebook's going to be a big winner? I believe Pachter with Unity. I believe that's a possibility. But, you got Roblox. You got a lot of these metaverse stocks, and most of them aren't making money.
Dennis, give it a few years when your kids are a little older, and then we'll talk about the metaverse, all right? Because I have a feeling.
How is this different than the Nintendo Wii? Like, going back, is it not just a souped-up version of Nintendo Wii from 20 years ago? I mean, I created a Nintendo Wii. This is 20 years ago.
I know, but
I created these, little memes of myself. And seriously, tell me about this
real quick.
Yeah,
Dennis, you got to understand. There's never been an digital economy.
Yeah, it's a whole world, man. It's a whole world, man.
There's never been money. I never played Sims and made money. Now you can play The Sims and make some money.
Like real money.
In any regard, everybody who's saying I'm out of it, I haven't lost any money on it. I think a lot of people who've invested in this environment have lost a lot of money on it. So I still have time to change my mind here. I don't know. I think
I'm not convinced either. I'm
not going to say much either. I just think we're already in the metaverse. I mean, I don't think it's really anything.
Well, that's what Musk says. There's a 10% chance we're actually living in somebody else's metaverse.
We're
actually just simulations ourselves, and we don't really exist. It's an interesting concept.
That's it.
I get in big trouble. I've been talking about the metaverse, with the family and everything, and it's just like, will you shut up with the metaverse? And I'm like, it's coming. But I want to just going back to one thing Pachter said yesterday. He threw out a couple zingers and, a couple good statements. When he was talking about the ATVI and Microsoft, did you hear what he called one of the law firms? Did you hear the statement?
No.
He called it a white shoe law firm.
Yeah.
Yeah. I just thought that was a great statement. You know what that means, right?
No, I don't.
Spencer, Do you know what it means?
That's a known term, though. That's not his term. He didn't come up
No,
with
no,
it.
no, no, no. But it's just like a term you have it, and I thought about it because back in the old days, real old days, I used to have a pair of white Bucks, and there were these
Yeah.
white shoes and everything, and he was basically saying the old guard,
Yeah,
the
I
old,
thought
old
that-
Well, this is me and Joel.
I-
I mean, maybe
yeah.
we're old, and maybe we're going to get left behind, and the metaverse is going to take off, and we're not going to, we're going to do everything just sitting in our chair, and that's it. But
Right,
I don't know.
whatever.
We might
Okay.
be wrong. We could be wrong.
All right. I'm bringing this back here. Bringing this back. Here's another reopening trade today that is not working, but for a different reason. And that's fun. FUN.
Oh man,
Yeah, why would they turn that deal
not
down?
a lot of fun.
So apparently, SeaWorld made an unsolicited takeover offer for FUN, and that offer has been rejected by Cedar Fair. And they had also had earnings last night, but that's besides the point. I think this morning.
It was up 20% on the fact that SeaWorld might buy them. We can see we rallied from $50 up to 61. Giving a lot of that back at 50, it gets interesting. It is a reopening play. Like I said, I think yesterday on the show, is I'd go to Cedar Point if I don't like roller coasters. But if I was younger,
I'm going in a few months. I don't know.
Well, there you go.
Yeah.
They kill it, man, on those roller coasters. I don't know what the big one
Blue
is
Streak?
there now, but there's some crazy ones
There
there.
was
They
like
had that one, that dragster, Top Thrill dragster. I rode that thing like 15 years ago. It goes from 0 to 120 miles an hour in 4 seconds. It's rocket ship technology. They kill it, man, on those roller coasters. Cedar Point rocks.
What Dennis was talking about was if it gets back down to the $50 area, that's where the whole move emanated from. So, maybe they'll come back with who knows. I mean,
I think at 50, I'd be a buyer. So you're 55. 51, 52 is a lot more attractive to me than 55, but I don't know if it's going to. The problem is the reopening stock. So you would have been up a little bit just because you're in a reopening environment. So I don't know. I have no position in this. I actually day traded it last night, but I have no position in it now, so I can freely talk about it.
Cedar Point. Someone doesn't know what Cedar Point is.
I kind of want to buy the dip on it. Cedar Point's in Sandusky? Sandusky, Ohio. Yeah, the island, Lake Erie, full of roller coasters. It rocks.
Cotton candy.
Yeah, it's fun. If you're like a teenager, that place is awesome. I can't ride roller coasters anymore. I get a headache from it.
You've never been?
I never. Yeah. I'm going this summer, so I don't know when, but I'm going.
It's a killer. Okay. If I was 15 years younger, I'd go with you, Spencer. But I can go to Disney World now, but I cannot ride the Top Thrill dragster. I'd feel like I'm hungover for 2 days after that.
Dennis, the invitation's open.
Bring your.
I used to love roller coasters in the younger days. I can't do them now.
I'm just saying.
Bring your change of clothes, Spencer.
What's that supposed to mean?
Because if you go on one of these water rides,
okay,
you're gonna get soaked.
Oh, the water.
Oh no, I didn't mean you're gonna do something in your pants in one of the. What
he gets up to that top, and then they drop you 90 degrees.
The gremlin? Isn't there the gremlin?
I just wet myself.
Right, Spencer, you are not doing a good job in keeping this show under control.
Actually, this show has gone off the rails.
I know. We should just end it right
now.
I
think I am doing a good job, actually.
Dan Ives will bring us back at the end.
He'll be like Dan Ives is like, I'm going on with these guys. They're absolutely nuts.
Yeah, these guys, they don't even talk stocks. They just talk like roller coasters and memes and Nintendo Wii. And then they're going to talk Lazy Boy.
So Lazy Boy had earnings here. This is not. It's not we discuss sometimes on this show. I guess it's kind of a stay-at-home trade, right? Because you stayed home in your Lazy Boy, right? So their earnings per share.
I'd put stay at home.
Yeah, their earnings per share came in light, 65 cents versus an 89-cent estimate there. Sales came in a little higher, 571 versus $559 million here. But it's down. It sort of fits with our narrative of the day, right?
Yeah, reopening hot, stay at home not. I could throw it in stay at home for sure.
For sure.
And it's a stock that's gone nowhere for a long time. And this is a stock that's always range bound, has a little dividend. You get down this 0.32 area, do you find support again? You might, but we've hung out in this range from like 32 to 37 forever. Although on an earnings report, disappointment. I'm not buying disappointing earnings when they don't bounce back in the first 5 minutes because there's too many that continue to leak. And you're exactly right, Spencer. With this feeling more of a stay-at-home play, it's not a reopening play. So like I said, I'd be kind of inclined to buy the Fun Dip. Fun Dip. Wasn't that a candy? I think it was. Fun Dip. A little package, powder. But anyways, I'd be inclined to buy the Fun Dip. I would not be inclined to buy the Lazy Boy Dip.
And just for, we've said this 1,000 times, Lazy Boy was founded in my hometown of Monroe, Michigan, a couple
So we're not supposed to
100
say
years
anything
ago.
about it.
And one of my buddies is Chuck Knabush. His great grandfather founded the company. He just went around the town. He would had this idea for a chair. He asked a couple people to invest with him, and he did. And he started this major company. Monthly support at 32. You can see all those monthly lows: 31.92, 32.23. So 32.10 was even last month's low. So, are we going to do the Lazy Boy story here?
Oh no,
Well, we're actually making
we're
pretty
there.
good time. We're making good time today.
Okay.
Actually, I've
Okay, I'll go on mute.
When are you doing it?
I've
Right
managed.
now?
You want to do it right now? I've managed to keep the train on the tracks more or less for the first 25 minutes here. So I think
We've
have the time.
teased it for a couple of years here, and it's almost built up too much that it's going to be probably now not as good. So okay. Format. I'll go to 8:31. I could tell this story, and okay, it's my friend Eric is the actual person who went through this Lazy Boy experience that I'm going to get into. Can't give his last name because he won't allow it. I've tried to bring him on the show to tell a story because he tells stories like nobody other. The attention to detail. This would be an hour story. He'd tell it almost in real time, and you'd be laughing through the whole thing. So I'm going to tell you the short 5-minute version of it. So scenario: back to the university days, 20 years old. My friend Eric goes down to Ohio State, going to Buckeyes game, and they go to a house party to start, pre-drinking, right? Then they go to the game. Everybody has too many drinks. Comes back. It's back to the house party at 1 o'clock in the morning or 2 o'clock in the morning, late. And everybody is the house party is over. Everybody is just passed out. It's young college kids. Everybody's had too much to drink. So anyways, he's staying at this house is the problem. It was his buddy's house. So he's staying here. So he's like, well, where am I going to sleep? This is bodies. There is nowhere for me to sleep here. So he's looking around. He says, oh, Lazy Boy, right there. Just sitting there. He's like, well, I can sleep. That'll be a good spot to sleep. So he goes over to the Lazy Boy, and he's had too many drinks, and he's kicking back and relaxing. He kicks the Lazy Boy up, and he's just relaxing and gonna go to sleep. Well, you know how sometimes you had too much to drink, and he has a little jerky movement. He jerks himself awake a little bit. So he jerks himself awake, and he puts the recliner, and it goes down, and the reclining part, where you put your legs, snaps back into place. But the problem is, he gets his leg caught inside that reclining part. So what do you call that part, Spencer? So I get it.
The footrest. I don't know.
Yeah, the footrest. So the footrest was out, but he jerks himself, and then he gets his leg caught inside the footrest. So it's locked into place with his leg in it. So he's sitting now in the Lazy Boy, and he's got his leg stuck in the Lazy Boy. So he's literally stuck in that footrest. And you can't, the problem with the Lazy Boy is you have to push the footrest in to release it. It has to go in, but it can't go in because his leg is blocking it from going in. So he can't pull it out. So anyways, everybody's asleep. So he yells at his buddy, hey. He's like, you got to help me here. I'm got my leg caught. And the guy's looking at me like, what do you mean? He's like, I've got my leg stuck in the Lazy Boy. The guy laughs a little bit. He's like, okay. So he's trying to open it up. They can't get it open. So they're trying to pry it. He can't push it to release it. Can't pull it. So he's stuck in it. So, okay. So anyways, he's trying to, get out of this thing. So then, he's rocking, he's like, okay, well, they're trying to work it. Anyways, they get it. They're pushing on it so hard, the Lazy Boy falls over. So now he's actually stuck on his side. The Lazy Boy's leg is caught inside the footrest part. Can't get it out. And now he's laying on the ground, stuck in the Lazy Boy. So they get another friend. There's two of them now trying to get him out of this. And they're like, can't get it open. He's like, actually, my leg, it's been 10 minutes now. My leg is actually starting to really hurt. It's stuck in here. It's cramped. It's actually, I'm starting to get hurt. He's like, it's crazy, but he's like, call 911. Call 911. I'm stuck in a Lazy Boy, and I don't want to lose my leg in a Lazy Boy incident. He's like, my leg hurts too much. Call 911. They're like, we're not calling 911. Call 911. So they call 911, and the friend and says, my buddy is stuck in a lazy boy. 911 operator says, sir, this is a Saturday night. We get a lot of crank calls. We don't need, your jokes here to a 911. He's like, no, for real. My buddy is stuck in a lazy boy. I need you to send somebody to send the police or somebody to get him out. So anyway, or send an ambulance. His leg is stuck. It's turning blue. His leg hurts. So they go, and the ambulance driver shows up like 15 minutes later. They look at him, stuck. He's laying on the ground like this, stuck in the lazy boy's leg, and both ambulance drivers start laughing because it's just a funny situation. He's like, it's not funny. My leg really hurts. They're like, okay. So the ambulance drivers are trying to get it open. They can't get it open either. So they call the police. Police come with the jaws of life, not a word of a lie. They show up with the jaws of life and come in with the jaws of life and snap the footrest, and his leg is released. The whole ordeal was like an hour. It's like, thank goodness I did not lose my leg in a lazy boy. So not a word of a lie, buddy rescued from a lazy boy with the jaws of life. And that is the 5-minute version.
Bravo.
It's good. He said 8:31 too, and you went
I'm right there. I was trying to watch the clock as I'm telling, so I had to leave a few little details.
It's been like 2 years since we've told that story. Everyone chill in the chat.
Jaws of life. And that's a true story.
Yeah,
Jaws rescued from the lazy boy with the jaws of life.
Gosh, I wanted to hear
if that was on social media. If that was social media nowadays, that would go viral.
Oh man, if you would
all
have
over the
happened.
world.
Oh my lord! Import prices, PPI there. We're getting. Was it? Or we got retail sales.
Yeah, retail sales. Oh man, I had a feeling. Oh, this is for January, so never mind.
Strong.
It was very strong.
Yeah.
And we'll get retail earnings starting tomorrow with Walmart, but mostly next week. And it was a strong holiday season as well. So I have a hunch we'll see some numbers come through strong from there. But retail sales for January, 3.8% versus a 2% estimate. So big beat on that. Anyway, a lot of data out today. But don't forget, we do have Fed minutes out at 2 p.m. Eastern time. There is some disagreement amongst our crew here with regards to how much it's gonna move the markets. I'm of the camp where it's probably not gonna move the markets like it did the last time around. Mitch and Dennis do not agree with me. I don't really know where Joel stands on that. But so that's 2:00. That's gonna be kind of the big thing. The big intraday news item is gonna be the Fed minutes today. So stay tuned.
I think it's gonna be I think it's gonna be a whippy day. I think really.
It's a whippy year. It's just a choppy year, and you've got to keep playing that chop. And how you play chop is you're buying dips, selling rips, not chasing moves. Chasers get destroyed in choppy environments. They really do. We're not in this momentum environment where everything goes and everything continues to move. You're in a chop fest environment. It's been choppy all year. It continues to be choppy. I think the Fed minutes will matter because there's two things that matter to this market right now: Ukraine and interest rates. And we're going to get some information on a tone, at least the tone. Maybe we can figure out some tone, something said there in the minutes that the market might grasp to. But I do think it'll be a market moving event.
Okay. There we go. 8:33. You know what we can do? We can actually bring on our next guest a couple minutes early here because I see her lurking backstage. Michelle Krebs is the Director of Automotive Relations at Cox Automotive and Executive Analyst at Autotrader, and has as good a view of the automotive industry as anyone, frankly. So let's bring Michelle on right now. Michelle, good morning.
Good morning. I didn't know I was lurking.
That's what I say to people who are backstage. How are we doing today?
Oh, fine.
So give us your top-down view here. There's a lot of headlines coming through on all the different automakers, both on the EV front, on the supply chain front. Give us your overview of this market right now.
So the overview of the market is kind of what it was as we closed last year. We still have inventory shortages. We still have very high prices, although they are coming off their peaks. We do think this year will be better than last year. We sold about 15 million vehicles in 2021. We expect to add another million. We're being very optimistic that the chip supply situation will ease and that production will ramp up. Fingers crossed on that one. So And then, of course, we had earnings reports come in, and what it shows is automakers are making a lot of money, more money on fewer vehicles sold. So it's not been all bad news for dealers and automakers.
I mean, the prices of cars too has gone up like I took a drive through a lot a few weeks ago, and I couldn't believe the price tags on the new cars. It felt like they're up like 20-30%. I don't know if that's accurate, but
and I think
it
that's
feels
a little high,
like it.
but they are up. And what's interesting is this is the first time I ever remember that vehicles are selling at full list or more.
Yeah, like people I've heard in some cases playing overlist just because they want the car now. They're like, well, we can get you the car now, but the price is this. It's like, I've never heard of that. You always knock a couple $1,000s off the price tag when you're negotiating for a truck.
And incentives are the lowest. I think they're like 3% of ATP or something like that. They're ridiculous. So, and that's an area that automakers are saving a lot of money.
So, Michelle, how do we think this all plays out? Assuming the automakers are correct in that, and you are correct in that the chip shortages abate and get better, and do prices come back down like where they should be?
We already are seeing them slip off their peak. They're going to stay high. I saw an interesting chart the other day that showed basically we are paying prices now that we would have paid under normal circumstances with typical inflation 3 years from now.
Okay.
So they aren't going to fall far back because we do see inventory shortages for quite some time because it's going to take time to feed the pipeline. The other thing is we've not sold any vehicles to rental car fleets, and they're chomping at the bit to get vehicles. The industry hasn't really supplied even the commercial fleet business fully. So there are a lot of levers to pull for automakers should there be any slump in retail demand, which we don't see at all. So we're going to see if the production's there, if the vehicles are there, we'll see strong sales for quite some time.
We're on the line with Michelle Krebs. She's an executive analyst for Cox Automotive. I want to go to Ford here. And man, oh man, I don't know how much this is in the national press, but it's certainly in the local press. And are they putting a lot of money into the old trade station downtown? And they're trying to transform, right? They're looking 10, 15, 20 years out, for transportation, for the roads, for the infrastructure, for the engineers. Man, they're spending a lot of money. Do you think that, they're on course for this to really, send the country or send the company, set them up for the next 10, 15, 20 years? Or do you think this is a pretty expensive experiment?
Well, they have said they're spending about $1 billion. They're going to be moving their autonomous vehicle operations there. They're getting some support from the state. Google just announced it's going to move some operations into that building. There's other lease possibilities in that building if they don't take it all up. I don't know how to predict how it'll all turn out, but I think a lot of what they're doing is very interesting there. I think it was last week or something, the state and Ford announced they're going to do the first little stretch of road that powers EVs as they're moving along the roadway. And I think that's because one of the big things we've got to tackle is how do we do charging for EVs if we're going to go fully in that direction. So I think it's interesting. I don't know how it'll turn out.
Speaking of Ford, Michelle, I was a little bit surprised to see I think they advertised during the Super Bowl for their EVs when they admitted like we can't keep up with demand.
Mm-hmm.
That was an interesting decision, I thought. As far as the EV side of the market, do you have any thoughts for us there, specific automaker or otherwise?
Well, we have seen ever since the fourth quarter of 2020, we have seen a surge in electrified vehicles. So hybrids, which are twice as many as EVs, and EVs. We're now seeing, about I think it's 28% of the shoppers we talk to say they're considering an electrified vehicle in the future. About 10% of those may be EVs. There's a whole lot more choice on the market. It's just was only Tesla, and we're seeing a lot of new vehicles. And as far as Ford's concerned, we are seeing shopping for their new EVs and hybrids really skyrocket. The Maverick, with the little Ford Maverick pickup truck that comes as a hybrid, but you can order a gasoline engine, has really taken off in terms of interest with the public. Of course, it helps that it starts at $20,000. The Ford F-150 Lightning, the electric truck that comes this spring, tremendous interest in that. It's gone to the top 10 of shopping on our site, and yet it's not even available to buy, and it's everything that's going to be produced is already spoken for.
Wow. There was a question in our chat. Someone asked if I could please ask you about Carvana. I don't know if you have thoughts on Carvana at all, or how it fits into all this.
No, it's, they have changed a lot of the game. We certainly pay a lot of attention to Carvana, Vroom. They offer an online experience, which we know is the way consumers want to go. They've done really well. They've had some stumbles in terms of paperwork in Florida and North Carolina in terms of titling and that kind of thing. But I think they're a force to be reckoned with.
Besides the supply chain issues, the automakers obviously are labor intensive here. Do they have the pricing power to absorb the rises in wages, right? With inflation and everything. How, just going back to prior inflationary periods, how is what's been the impact of rising wages for the workers?
Well, the wages already were determined by the Detroit Three because they negotiated those in their contract. So that's not really changing. I think commodities prices are a much more concern because they are skyrocketing. Things like lithium, you guys watch it; it's just soared in terms of price, and that you have to have that for today's EV. So I think that has way more of an impact on the automakers. They know what their labor costs are, at least through the
What are they up for contracts again? They just do one?
Because I can't remember because it's a 4-year, and I can't remember.
It's going to be a doozy. Yeah. Boy, oh boy, that is going to be a doozy.
All right, Michelle Krebs, it's always a pleasure to chat with you. Director of Automotive Relations at Cox Automotive, Executive Analyst at Autotrader. Michelle, thanks so much for coming on as always, and thanks for the insights.
Thank you.
Thanks, Michelle.
All right, and one of our few local guests, I will add, joining us from the Motor City. We always appreciate Michelle. Okay, so to 8:42, we're going to have Dan Ives from Wedbush on in 18 or so minutes from now. So in the meantime, we can cover more earnings, and we will definitely do some ticker time. We did not cover. There's a few things we didn't cover yet. We didn't cover Upstart, which is your gainer of the morning. Frankly,
I just want to say, if you want your chance to buy Shop at 800, it's going to be there in about 47 seconds. Look at that
Shop
thing.
Went down further. Oh wow,
Yeah.
It's up another $40 since we talked. But it can't buy the dips on these stay-at-home plays.
Yeah, look at that. 800 should change.
Not that Shop's a pure stay-at-home play, but I mean it's online shopping. So this is obviously the business is building sites for small businesses. So it's definitely not a reopening play. Upstart too. This is leaking, man. Give us the earnings, but this is leaked big time.
Yeah, so as I said, it's the gainer of the morning, and it's still up 21% here, or was last I checked. But their earnings
half of it back though.
Earnings were out last night. 89-cent EPS versus a 51-cent estimate. Sales of 305 million versus 262 million. So they blew away the Q4 numbers. They gave Q1 sales guidance above estimates. They gave fiscal year sales guidance. That's light. That's interesting. They also announced a $400 million buyback. So earnings beat, strong Q1 guidance, weaker fiscal year guidance, but buyback to boot.
They could not stop buying this last night, Joel, but it's not the kind of stock that's, ripping around going up 100. You're paying up $40 or $45. I guess it was up over $40 at one time. You think it's going up 80 on that report? Is this environment?
It's got to be one of the worst looking charts of a stock up 20.5%. I mean, it hit 150. Was there anything on the dailies there? I don't know if there was anything on the dailies. Man, 155.60. Nah, the only way you caught that thing is if you were just throwing out, 100 at 140, 2 at 143, 500 at 145. It's the only way you catch that kind of move. I'll just say where we're sitting right now. and we're finding a little bit of intraday or pre-market support here at 131. So doesn't hold 131. You got a long ways to go to the top of yesterday's range. That's way down closer to 110. So better catch a bounce here. I don't think you're going to get a look at the pre-market high. And
I
let's
think
see
it's
if you
gone.
do.
And it
Yeah,
needs to
that's all.
hold this 130. It's hanging out
Yeah,
here.
look at
Like,
that.
you
Ugh.
don't want to see a stock when you're buying these things, and not that I ever buy one chasing, but you don't want to see them give half of it back. I mean, and then what can happen is it continues, like, and then you're in a
And
whole,
people
like,
are caught.
yeah, you got people that have been buying this at like you got bag holders from last night. I mean, 1.4, and then you have bag holders from basically forever in this stock when the guy was on CNBC and they asked him what he does and he didn't even know, but he was long a bazillion shares. I mean, 400 to 100 people want to get their money back. So as you come in, and this is what we talk about all the time, it's hard for stocks to just that have been down for this long to just all of a sudden get it all back because there's too many people who are underwater. So unfortunately, I wouldn't be chasing this one either.
Okay, I want to move away from earnings here. If you have a company that's main product is a mobile app and the main revenue source is advertising, watch out today, okay? Because there's a report from the WSJ that Google is following in the steps of Apple, and they are going to be doing. Remember how Apple had the new privacy restrictions where they forbade tracking users for advertising purposes? Google is going to do the same thing. They're going to be removing ad tracking on Android phones here in the next what does it say? In the next doesn't say when, but they plan to remove ad tracking. So look at Facebook here. Look at Snapchat here.
Yeah.
Look at Twitter here. Look at MTCH,
Oh my gosh.
Match. Every single company, if you have an app, if you're an app-based company and you're an advertising-based company as well, then you're in trouble today.
And they're already in
Look
trouble.
out.
Yep.
I mean, now you're on Facebook, you're breaking down to a new 52-week low. And everybody's like looking at this and is saying, oh, okay, it's value. And, I look at it too and say at a certain point in time, yeah, but I mean, holy, making new lows every day. I mean, now they get hit with more bad news here again. Does it have a date with 200? It might.
Why did they just decide to do this now, huh?
Well, they've been doing that. I mean, and their core business is under attack from multiple fronts. From Facebook's core business, competition, and now you've got the ad tracking that is obviously, people are opting out of it. I mean, so now you can't do that, when I'm searching for something or whatever, and then it pops up and starts throwing me ads because, oh, hey, he was searching for a new car, and now I've got a bazillion new car ads or a new F-150, I have a bazillion F-150 ads. If you can't do that, those advertising dollars are worth a hell of a lot less. There are problems for Facebook, man.
Yeah, I'm just looking at the monthlies. I mean, another step down seller here. They're just like whoever was trying to oh, we got a little double bottom here. Nope, at 214.78. We're trading 213.50.
I think it's going under 200.
It always seems to have some bounces where that's going to be. 207.11. That takes you back to June of 2020. And then after that, 198.76. So
yeah,
boy,
I think it's got a date with that 198. We've come too far now. The easy money. Well, no, there's never easy money, but the easier money is probably actually to short the stock. I mean, that's crazy to say, and and I'm not saying I don't like shorting stocks that are down $7, but I think this is a day with 200. That's just my opinion. Not short the stock, just my opinion, but I think it's got a day with 200.
It's better than shorting the stock up $7, right? I mean, at least you got the
sometimes.
Momentum. Yeah, you got the
you're
momentum
with the flow,
going.
but I hate shorting the whole too. But I don't think this is. When did this break? When did this news break?
8 a.m. this morning.
Okay,
Yeah,
I don't know if they've talked about it on CNBC yet or not, but when it gets CNBC attention too, it sometimes starts to get hit.
But not everything's being hit equally here. So I would point you, because obviously we all know Facebook, but I would point your attention to Pinterest and Snapchat and Twitter and Match. Match is an app-based company that relies on subscriptions, but also advertising.
They hate Facebook right now, though.
I know, but this doesn't just affect Facebook, is what I'm saying. So everybody, every app.
Look at that snap. Ooh, man, oh man.
I don't understand why this is getting a pass. I seriously,
Either
it
do
was a
I.
good quarter. Maybe everybody just expected so much bad about it. I think, you've had this basically from the bottom, Joel, a week and a half ago, 20, that when they sold
It's
everything, $24 to 41. It was like up 80% in 7 days, 80% 8 days, and a stock that's in an overall downtrend. And I wouldn't want to own it. I'll say that.
someone made a stand here. I wish I'd been looking at this one. Look at this $42 area. Someone said, you know what? I'll sell all you want. Just under 42. Look at that. 197, 197, 189, and then stepped down a little bit yesterday, trading on the lows of the pre-market session. What do you got? I guess the only daily low, you got 37.11 if you feel like nibbling. And then this low right here, you started to get into the gap at 34.10. Spoos are now cratering here. We are down. We are making a new low of the pre-market session. Do we have 851? What was it? What was there any kind of? Did we
I
see
mean,
any kind of?
I mean, I'm watching Facebook tank here. Doesn't
Yeah, I guess that. There you
doesn't that
go.
move the whole market?
I guess so. We found that out again. Facebook, a culprit. Look at this. Snap and then
Market gets
Twitter.
Facebooked
Yeah,
Yeah.
again, man.
Yeah.
again.
And just to be clear, so this is Google's decision. This is not a move that is really going to affect Google one way or the other. In the same way that Apple's decision didn't really affect Apple one way or the other either. I guess all they're doing is they're saying, hey, we're willing to take a little bit less of a cut from your advertising if it means more privacy for our users. It makes perfect sense that Apple did this 7 months ago. And so Google is just following suit here. So yeah, Facebook, any app-based advertising company is under attack here. Facebook under attack probably the most, which is why they pivoted
Shop
to
to
the
you
metaverse.
drops
But
793 down 96.50. We
Yeah.
just hit 793. Can I ask? Can I try and look at the other side of this? Is there anybody that's going to benefit from this? Is there any kind of advertisers? Come on, Spencer, help me out.
Before you go there,
Definitely not Viacom.
before you go there, go to the trade
Sorry.
desk. Wait, before you go there, go to the trade desk, because the trade desk is a company that facilitates this kind of like mobile advertising, right? And they had earnings this morning, and the earnings are pretty good, but this kind of a headline directly impacts
They're getting hammered
the
off this
business
headline
of
too.
the trade desk. And thanks to whoever pointed that out. Is
This got up to over $90 on the headline number.
Danny in the chat, I think, pointed that out. I forget who it was.
Annie?
Sorry.
Or Danny?
Someone in the chat pointed this out. But yeah, the trade desk has reversed this morning, because here you have now the implications of this are quite clear, right? You're going to have it basically, if you're a company like Facebook or any company that advertises on mobile, right? How do you advertise? You advertise by aggregating all this user data and then saying, hey, Procter & Gamble, look at all this user data we have. Oh, Procter & Gamble, what's that? You want to target single mothers who've been to these 4 websites in the last month. Here you go. We have that data for you right now. And then that goes through the advertising ecosystem via a company like the trade desk that facilitates that. So there's going to be less of that data available to gather in the first place, which just makes it harder to sell ads against, which is the entire business here. So this is not a great situation.
News algo just hammered on this one, Joel. They've had the beat. The news algo bought this thing up to $90, actually $91. It looks like on the chart from where I'm looking at it on yours. It's now 76. You're talking about a 17% fall here from the highs we set 45 minutes ago. This is not a good headline here. I don't think it's bouncing back to those 82, 85. Not if this is impacting like Spencer Israel is saying it. I don't know if it continues to go down from here. I don't know if I want to sell. Just fell $17. But man, on a bounce, I'd be selling to trade desk. Just my opinion. So if you bounce from here, I'd be lightening up. Like you get anywhere near the close, like 80. I don't know if you're gonna. But it was 90. So I don't know. Maybe you get a little bounce here. Maybe it's some reprieve. Maybe somebody like Kramer comes on and says, oh, it was a great quarter. Maybe you get a little bit of a reprieve. But This is not good news here either. Man, this tough market.
This is like a brutal.
Tough.
This has just been a beatdown kind of a pre-market prep show, man.
But the SPY's holding up well. And you know
Yeah.
what's holding up is the reopening stocks. You know, that's like, if I like, you can clearly see some separation here today. I mean, maybe not as much, but the cruise lines are still trading the green. Some of the retailers are trading in the green. We got some of the cyclicals trading in the green. We got oil's way up. Do we have news on Russia or Ukraine? Is there anything breaking on that? Because oil's now taking another leg higher here.
Because they don't know, they haven't identified whether they are retreating.
Somebody, Blinken was speaking earlier. Hey, Blinken, I can't. Every time I see his
Abe
name,
Lincoln?
every time I see his name, I think of Robin.
He's in the metaverse. I saw Abe in the metaverse.
That's cool. You can bring people back from the dead in the metaverse. I never really thought about that.
Blinken. I said Blinken.
Blinken.
Yeah.
I thought we brought Abe Lincoln back from the metaverse.
He's Anthony Blinken, right? He's Secretary of State. Every time I see his name, I think of Robin Hood Men in Tights. Dave Chappelle's character, his name.
You think of who?
Robin Hood Men in Tights. That's pretty good.
His character's name is Blinken. Anyway, moving on. But no, I think he was speaking this morning.
We're leaking here. I'm gonna say
I got something here from Russia.
Go.
So the headline that was released just recent was Ukraine crisis. This is from The Guardian. NATO accuses Russia of increasing number of troops on borders despite claims
Oops, they were wrong yesterday. Just the logic. Sometimes it just stops to think about the logic. I mean, you had this ridiculous rally that, Ukraine, they may not invade now. Maybe it's backing off. So let me just try to think this straight. They mobilize all the troops. They get ready for an invasion. And then they just decide, no, we'll talk, and we're just gonna pack up our troops and go home. Is that what we were supposed to believe yesterday? There was no way. So I don't know. I think eventually an invasion is actually going to occur. I think it is. And that's why I'm scared a little bit to own stocks here right now. I don't know if that's 100. Nobody knows anything. Maybe Putin does pack up his troops and leave. But from all of his history here, Joel, do you think he's packing up those troops and just going home and saying, okay, yeah, we don't want to piss everyone off in the world. We better just pack up and go home. He doesn't play that way. He's tough, man. I don't think he's packing up and going home.
I think he needs to take a look at his history books.
I don't think he's going to win, if that's what you're saying. But I don't think he's going to pack up and go home. Do you think he's going to?
I don't know.
I mean,
that's what the market was saying yesterday. I think we said this on the show.
You can't
You're buying stocks yesterday.
Like
you're banking on that he's packing up and going home. I don't think he's doing that. So that's why I wasn't buying stocks yesterday.
Yeah, not on a ripper day.
And
like
the media, and you can't believe anything. It seems like they grab something and they spin it to fit their narrative, and obviously not everyone. But, it's the same thing with the truckers in Canada. You have to believe that we're all in lockdown here. The truckers are all fighting for the freedom, and because none of us are free. I went about my business yesterday. Brother-in-law went and saw a movie, movie theaters open.
Oh, what'd you see?
Seems pretty open to me. I seem pretty free. I feel pretty free. I guess you can't fly on an airplane without a Vax card. So, like I said, they're going to get rid of those Vax cards. I can see we're on the path to freedom already.
I said it was going to be a busy morning, and I wasn't lying because we got news flying left and right here. But I do want to bring on our next guest. I see him. He's here now. Dan Ives. This has been a long time coming. Dan is managing director of equity research at Wedbush Securities, and we are very excited to have him on the show. Joel, you ready?
Yeah.
All right.
Yeah.
Let's get Dan on the show right now. Dan, good morning. How are we doing today?
Good. Great to be here.
Great to have you on.
Yeah, really. What a crazy day in the markets, just overall. But I was looking over like your areas of coverage and the stocks that you cover, and you got you really cover the gambit from stocks that make a lot of money and value stocks, and then all the way on the opposite end of the spectrum. I mean, how do you put the different hats on to differentiate, to analyze stocks that are so fundamentally different?
Yeah, I mean, look, my coverage over the last 21 years, it's evolved. I mean, I started off core software and cybersecurity, and now covering more, especially over the last sort of 5-6 years, disruptive technology. Electric vehicles is a huge focus of ours, especially with Tesla, one of our top picks over the last decade. And I think, look, everything's evolving. So I don't think you can just paint every sector with the same brush from a valuation. You got to look at it differently. And that's how we've always done it. Now, obviously, we've always been more, I think, bullish in terms of how we've looked at technology. I think we're in the middle of a fourth industrial revolution. And, I think there's going to be clear winners and losers. But that's sort of how we painted this sector. And we just view things differently. Some have looked at Tesla like an auto company. We've never viewed it as an auto company. We view it as a disruptive technology vendor. That's how we valued it. And it's all in the eye of the beholder. The haters will continue to hate, but that's always been our thesis.
Dan, I want to go to cybersecurity for a second here because you had a note out this morning on, I think it was Zscaler and Palo Alto, and you were bullish on both. So can you elaborate on that?
Yeah, I mean, even if you think about earnings, I think the strongest standout in tech has been cybersecurity, fundamentally. I mean, the average company beat and raised by about 400 to 500 bips. I mean, some of our table pounders have been Zscaler and Palo. They'll both report next week. Our checks on both of those have been much stronger than expected in terms of the shift to the cloud. And I think it's one where, I heard you talking before about Shopify and some of the work from home names, and obviously they're fading. But if you look at the enterprise digital transformation that's happened on cloud, I think it's unmatched anything I've seen since the mid-90s. And I look at Zscaler in terms of, I think that's going to be a core winner over the next decade, and it's going to grow more into its valuation. Palo Alto, I think, is a re-rating name on cloud. I think significantly discounted here relative to what we think is going to happen.
When you say when you say your checks have been stronger in terms of the migration to the cloud, what exactly does that mean?
That means that if I go back about a year ago, you had about 30% of enterprises, 35% shifting to the cloud. That's basically putting their workloads in the cloud. That's where they're going to sort of move in sort of a semi-remote environment. Today, that's probably closer to 55 to 60%. And the reason that's important is that you can look at names like Microsoft, look at Amazon, the AWS cloud print, which was an acceleration, look at GCP. But as much as we talk about cloud, you need to protect those workloads, which is why names like Zscaler, CrowdStrike, to us, SentinelOne, among others, have been kind of core names to own here, despite obviously valuations continuing to get crushed.
I mean, and you go to a good point is there's going to be a lot of companies here that eventually will grow into these valuations. So you look and you think, okay, well, I can't play these nosebleed valuations, but I mean, you may not be the case in 2 or 3 years. How do we separate it though? How do we figure out which companies are going to be the companies that are going to, grow into those valuations and which companies are not going to be? Because I mean, we can go back to even like the tech bubble burst, and there were some great buys back in 2001, 2002. The Amazons were there. But, there was the pets.com too. I have difficulty separating. How do you separate it?
And that's the big debate right now. I mean, it was someone that myself that covered tech stocks back in the bubble, back in the burst. Obviously, I think I view those situations in terms of comparing time periods as dramatically different because the spending is actually happening today. And, we sort of break it out into, I think the clear winners are going to be, in terms of what we're seeing in cloud and cybersecurity, that trend to us it's not even a question that's going to happen. And to look, today you only have 44% of workloads are on the cloud. When that goes 70% in the next 2 years. So how do you play that theme? I think that's why when I look at cyber, I look at in cloud, I think these are the two of the core areas that we want to own within tech. Now, in terms of valuations, and this has always been our argument, transformational growth names, if you view them on a straight PE over the next year, you wouldn't miss the Netflixes, the Teslas, the Facebooks, the Microsoft. We could continue to go on and on. So many investors that I've talked to that have probably been at 6 shops in the last 10 years, they'll continue to argue on the transformational valuations. And you could argue till you're blue in the face. But I believe you got to look to when the models get fully scalable, 2024, 2025. That's how you value them. That's how you value a Zscaler. It's how you value a CrowdStrike. In my opinion, which is why these are some of the high flyer names that you continue on. So let's contrast that with like a DocuSign.
Yeah.
Work from home beneficiary, huge poster child, and that's one that will continue to decelerate and it's catching a falling knife.
What about, you say you talking to investors, and here we are in a a rising interest rate environment, inflation. The common speak is that the inflation and the higher rates are going to make their earnings diminish. When you talk to investors and you're doing your strict fundamental analysis, how do you confront those questions about, well, I can't own these stocks in an inflationary environment.
I mean, look, be on the street for decades. I mean, I sat next to an economist for 10 years. He was in the office next to me. If I literally believed everything he's told me, I would have never owned a growth stock from 2002 to 2022. So the point is, you know what? Every time investors talk about it, it's like, oh, I forgot. It's my bad. Tech stocks can't go up in a rising rate environment. I forgot that from business school. That was chapter 8 in that one book. Look, it just goes back to like, I think even though magnetically tied, I view it as the wrong perception. I'm not saying valuation scrutiny is not going to be there. Froth doesn't come off the market. But if you look at it on a peg basis, factoring in growth, tech right now is right within historical trends, about 1.3, 1.4, because growth in tech over the next 2 to 3 years is about 2 to 3x higher than historical. Because what we're seeing in cloud, because of 5G, because of cybersecurity, because of fourth industrial revolution. So it goes back to like investors, they hated NASDAQ at 4,000, despised it at 16. They're going to hate it at 14, saying that the world's ending. And I think that's ultimately what makes the market, right? In our opinion, I think that's what's created the opportunities in these types of tapes where it's a Fed Putin driven tape, news cycle, headline risk, everything else. And I think if you tune out the noise, that's created what I'll call diamonds in the rough over the last decade.
So just to be clear, you said PEG, you're referring to price to earnings growth. And just to recap what you said previously, you like Palo Alto, you like Zscaler. What about CyberArk here?
I love CyberArk. I mean, I think when you look at a basket of cybersecurity, you got to own CyberArk, Tenable. I think, you look at, again, we talk about Palo as well as Zscaler, Fortinet, even as sort of this basket approach along with Checkpoint. You want to own some value names with cash flow as sort of the basket. That's why I think cybersecurity basket approach is the best way to own it. Because you don't just want to own the high flyers in this type tape. But in terms of, let's just go back. I've looked back. It's about the strongest cybersecurity earnings that we've seen in about 25 quarters relative to expectations. So it just goes back to like, we could be in definitely what I call a white knuckle period. But I think sometimes as an investor, I mean, that's what I do, in terms of all day long, just hand holding institutional investors through the volatility. How do you own it? And I think that sort of created, the opportunity, even if we look back in the last few months. Go back to like supply chain fears in December, Apple, 160 felt like it was going down to 150. But yet look at that quarter. I mean, probably the strongest quarter we've seen at Cupertino relative to supply chain in a number of years.
So is there any cyber name that you don't like? Maybe I should have started with that.
I mean, in terms of cyber, there's not one cyber name that I specifically point out as one that I wouldn't own here. There's obviously names over others, but as an overall sector, now look, there's ETFs like the VIAC and others that you could play it. But I believe one thing from this call I want to take away would be, I think cybersecurity is probably going to be the strongest subsector of tech this year.
Just going back. All right, I'm sorry. Go ahead.
Go, Joel. I'll go next.
No, I'm just talking about generational changes and whatnot, and obviously the pandemic has brought a lot of things into the forefront. Do you think that the tech industry without the pandemic would be at the same place that it is now? And then adding on to that, was there maybe just did you just have a temporary acceleration in growth here because of what happened? And now there's going to be a little bit of a reset, or do you think the circumstances would have been the same no matter what?
Well, I think it's a great question. Look, I think first off, there's a scarcity of growth in the market. So if you want to be in the right lane on the highway and own banks, that's awesome. Enjoy it. But I think more and more growth is where more investors want to be in the left lane. And I think more of that is intact in terms of just the scarcity to end the fourth industrial revolution that continues to play on. Now, clearly, pandemic accelerated growth and was a pull forward. Names like Zoom, I mean, the average human never heard of Zoom. Now it's a household name like a vegetable. So the point is, like, you saw acceleration. That's why the Netflix, the Zooms, obviously Slack, which got acquired, Citrix got acquired. You're going to continue to see those, the Shopify's e-commerce plays. Those will fade, moderate, multiples will compress. But what I would compare on the other side of the tack in terms of like what the pandemic did, I'd view it almost like a sailboat that was at port, where a lot of enterprises like, should we go to cloud? Should we rip the Band-Aid off? Okay, let's just sail around the little port. Now more have kind of sailed into the ocean. And like once that's happened, you can't put the genie back in the bottle. So I think in terms of the transition, what we're seeing in terms of the shift to cloud, that's what I talk about in terms of digital transformation. I believe the pandemic accelerated that, but we're seeing that play out this year. I mean, look, that's why it's my view, like, look at Microsoft as a stock. I believe Microsoft ultimately is going to be a $350, $375 stock. I think Amazon's going to continue to move higher in the sum of the parts because of cloud. I think Google is the same thing. More and more, you start to value the GCP business on the sum of the parts. Alphabet continues to move higher.
Dan, let's go to the EVs, and you've got coverage of two very different companies, Ribbian and General Motors. And you look at Ribbian, and it's obviously a growth story, but it's basically it doesn't make money. It doesn't even sell. We're almost pre-revenue at this point in time. And then you have General Motors, which is more of a value play. You've got buys on both. What are your thoughts here? Two very different automotive companies, but both in the EV space.
Look, I think there's a renaissance of growth that's happened in the 313 area code. I mean, I think in terms of what's happened with GM and Farley at Ford, I believe these are traditional automobile companies that over time, I think you've started to see some of it, will be significantly re-rated because of EV. You start to ultimately convert 10, 15% of that install base to EVs. I think these are stocks that get massively re-rated, which is why we're bullish on GM, which is why we're positive on Ford. And I view them as differently. When I look at the traditional ICE vendors and even like VW, throw them in there, I think there's a perception that it's Tesla or, in other words, it's either Tesla or they're going to cede share. Look, Tesla is going to, in EV land, it's Tesla's world, everyone else paying rent. I mean, let's just be clear in terms of the market share, scale, capacity, brand, and I think that continues to play out, despite supply chain issues. GM and Ford, you start to do some of the parts on what the EV business can do. It's my view in the next 18, 24 months, like GM's a stock that could ultimately double. Now, right now, traditional investors, they'll just focus on supply chain, battery issues, but I think GM, what Mary's done there, unique ability to kind of expand that, and that's our view in terms of why we're positive on GM and Ford.
What are your thoughts
Dan,
on
you're very
Ribbian? What are your thoughts on Ribbian here? I mean, just give the story here.
So in terms of Ribbian, I think Ribbian's it's a category builder. I mean, in terms of what RJ and the team have built out, in terms of sport utility vehicles, it's going to revolutionize pickup trucks. I believe Ribbian over the coming years has the opportunity, especially with the scale, as well as what you look at from a demand perspective, to be double-digit % of pickup truck market. And I think that's something that where right now, obviously a lot of hype coming out of the gate. supply chain issues, black eye in terms of the first quarter. You're seeing a risk off. Stock's gotten crushed. I mean, I view Ribbian, in my view, similar as how I viewed Facebook when it went public. I think Ribbian is going to be a significant player. And I think ultimately this is a stock that, starts to significantly rebound as I'll talk about growing into valuation, but Ribbian's another one. You got to look at 24, 25 scale. That's what you view in terms of where they could get to, and that's how we value the company.
Wow.
Dan, forward looking, it seems that that's what a lot of your analysis is. There's a lot of talk about, connected cars and driverless cars, and, you have your leaders. Obviously, you need the infrastructure to do that. Do you see it, any plays, and that would seem like we're a long way from it, but do you see, any plays and, as far as connected cars and drive, besides the traditional, your Teslas and whatnot, do you see other companies that have a potential to aid the development of this?
Yeah, I think names like, so there's some under the radar names like Ouija, which is a connected car play, big data. I think they play into FSD. Of course, the Waymo piece of Alphabet, in terms of how they play into it. I think Uber tangentially plays into FSD. So I think there's a lot of connected car plays going forward. But you're right. I think a lot of it, even though it's over the coming years, I mean, FSD is a real technology. Now, how soon do we get to level 4? There's obviously a lot of regulatory, a lot of safety issues that they need to navigate. But that's something where a lot of private companies that I talk to, some of the technology innovation that I'm seeing, whether it's here in the US or in across in Asia and throughout Europe, it's fascinating in terms of some of the FSD technology and connected cars.
Dan Ives, Managing Director of Equity Research at Wedbush Securities. Dan, it is a pleasure to have you on our show today. Thanks so much
Thank you
for coming on.
Thanks for your time, Dan.
All right. Hey, we stayed late for y'all. 9:16. We got to hop, though, because, it's about to be the open in 15 minutes, but also we got to go to live trading with Benzinga. So Dennis just dipped out without even saying goodbye. At least Joel's going to say goodbye to us.
I'm going to say goodbye. We're going to do a little different pre-market prep plus today because we had Dan over here on this channel. So I'm going to switch over to that now. We didn't do one ticker. So I want y'all to get in there, the ticker time. I'll open it up so everyone can get in there, and let's have some fun until 9:45. Looks like we're gonna have a wild open. Spence, I'll check in with you in a little
See you
bit.
later, Joel. In my defense, I didn't know that Facebook was gonna tank this morning, but here we are. So, all right, we got through almost everything on the agenda for the day, with the exception of some ticker time. So, live trading with Benzinga is going live in a couple minutes here. Mitch, Ryan, Junaid, live trading through the open. This stream will end and redirect to those guys. Check out the link that's scrolling down across the screen there. That gets you 25% off a Benzinga Pro subscription. I highly recommend you click that. It's also in the description of this video as well. Thanks to our guests today, Dan Ives and Michelle Krebs. Thanks to all of you in our chat. Thanks to our new YouTube members. You want to become a member? Check it out. Go to youtube.com/Benzinga. Hit that join button. Get access to custom emojis and more down the line. Smash that like button for me. And please remember that all the information from this show, all of our shows, meant to be used as informational purposes, not for investing or trading advice. All right, I'm going to hop live trading with Benzinga coming up next. Stay tuned for that. Good luck at the open today.